show back up. And there we are. Welcome out to our halftime report Monday morning and 10:30 a.m. Mountain Time, 12:30 on the East Coast. We've got Matt, we've got Mark, we've got Cody, we've got Tim. We've got a full panel, and we are back. I guess we had some issues on Thursday and Friday with YouTube and Zoom communicating, and I'm not sure which of those two was the issue, but we're back nonetheless. Matt, how are you doing today?
It was Google.
Google.
That's it was Google. Just
hey, short Google.
Zoom.
Don't blame Zoom.
Don't blame Zoom. Blame Google. Although that does remind me of the time Zoom went public, and that didn't work out for me.
Well, that was Zoom Technologies. That was one of the funniest things I've seen in markets for a long time. And then obviously
I called that one though. I called that one.
Somebody bought that at 6 and wondering why their IPO did not work out. And then they go to Zoom, ZM, Matt.
Trading's just like gambling though, Tim. Yes, said by known gamblers.
Sure. All right. Well, over the weekend, obviously, we had the G20. We had a bunch of headlines come in. Markets gapped open here today. They are backfilling on the intraday. We're going to break down all the action, talk about some stocks. Also on Mondays, we also go through the sectors and give you an update on our rankings. A lot of bold triggers over the weekend, Matt, but now you got to kind of update triggers. What's your reaction on the price action, first off, here Monday morning?
Yeah, that was my first reaction to the gap up on the overnight coming into the marketplace. And if you drop this down into an intraday chart, you can kind of see that gap happen when the futures market opens. And obviously, that gap comes out of the G20 update when basically, let me just quickly update the crew on the G20, Tim. First and foremost, trade talks are back on after 2 months of stalled talks. So we do have that ceasefire with China regarding the trade wars and the trade discussions and everything that's been going on over the course of the last couple months. Very similar to what we saw 6 months ago, Tim, with this. So I'm not kind of like the market today. I'm like, yeah, we've seen this before. But with a gap up in the futures market, it is going to impact triggers on the bull side. There's no doubt about it. It's going to impact triggers on the bear side as well. I'll just give you one quick update before I come back to the update to the G20. But take a stock like Charles Schwab here, Tim. Let's look at, and I'll just try to give an example of updating triggers here. So give me 1 second. So SCHW. All right, so you see this gap up here, okay? Mm-hmm. So that's the market kind of gapping up, and then you see it kind of settle in right here. If you drop this down into the daily chart, you had your trigger coming in. Basically, you had this bearish retracement coming in, and then you have this trigger that's now below this level here. But with the gap up, I actually like this even better here today, Tim. But this is the responsibility of the trader when you're looking at those scanner reports or when you're looking at any trade out there, to be perfectly honest with you. If it's still a good trigger, still a good trade, still a good pattern, still a good trend, you simply have to update your numbers. And when a situation like the G20 arises coming out of the weekend, and you have the entire market kind of gapping up a little bit on the overnight, you got to readjust those triggers. And so here on Charles Schwab, what I would do is I'd drop it down into that 30-minute chart, and I'd find that level that I'm comfortable still getting under. And for me, still underneath this little base here of $40, kind of where our original trigger was, that still kind of is legit, is still legit, but you certainly could get it underneath the low of today as well. So you certainly just have to update those triggers from a gapping situation. So I just wanted, and stop loss placement as well, typically when you see a gapping situation. But coming back very quickly to the G20. So first and foremost, trade talks are back on after 2 months of stalled talks. Number two, we are delaying the 25% increase on 300 billion worth of Chinese goods. Huawei, and this was kind of the shocker. Everything that I've said so far was completely expected by the marketplace itself. But Huawei can now purchase intellectual property products coming out of the U.S. And so that was a little bit of a gift we gave China, gave Huawei. And Huawei does a lot of business with U.S. technology companies, a tremendous amount of business with those the Microns of the world, the Intels of the world, the Broadcoms of the world. And so you should see a big impact there. Now, Huawei can't sell us products. They can't do that, but they can purchase our products. So that was an update. Also, China agrees to buy more American goods coming out of the agriculture community as well. And so you had some positive news coming out, but I think I can't remember, was it Chinese Daily? I can't remember the newspaper that came out this morning. And I think it sums up it, and I want to get you and Mark's take on this, but I think it summed it up very, very, very nicely. The Chinese newspaper basically stated as this, that while there's a greater likelihood of a deal, there is still no guarantee, and that the road is still very long to travel here. And I think that threw a little bit of cold water on kind of the talks coming out of the G20. But I also think that's, summarizes exactly what everybody in the market thinks today.
Mm-hmm.
We've been here before. We've seen these headlines before. It's par for the course. And so I'm not really taking that much positive out of what happened with the G20, just simply because we've seen it all before. But it doesn't change the fact that the market gapped out of resistance. And as long as it plays defense above resistance, I think you got to be some degree of bullish here, more than slightly bullish, some degree of bullish.
Several things that come to mind reacting to your statement. Number one is I think you were dead on with all of the points of what we expected. They ended up coming through to fruition. The Yahweh thing obviously was the one wrench here that we weren't expecting. I'm not impressed by the price action here this morning, Matt. In fact, it's got a buy the rumor, sell the news type of feel to it for me on the intraday. We did gap out. Now we are showing weakness since the price opened, since the market opened. Well, 29.60 is the line in the sand for me that if it backfills the entire week here, I'm probably just going to focus on theta fading, maybe even some of those bearish retracements personally, Matt, because the price action is not showing me carry through or bullish momentum or bullish sentiment out of the traders here that opened up and had to use their money today. And so I've got concern. I see red flags in the market right now.
Well, let me give you a couple more red flags just to go on that, Tim. I mean, economically, we did have some economic news come out last night and today. Chinese PMI report, which is a manufacturing report, hits recessionary levels yet again, came in at 49.4 versus an expectation of 50.1. In the UK PMI report also came in at recessionary territory. Back-to-back months for the UK manufacturing data came in at 48.0 versus an expectation of 49.5. And for the halftime crew out there, anything underneath the 50 reading on a PMI report is recessionary indicator. And then here's what's interesting, Tim. The United States came out with their PMI report right here, and it was actually a positive, and it came in at 51.7 versus the 51.3. So the U.S. is still king of however you want to consider what's happening from a global economic perspective. But even though it was a positive report, you really couldn't break through this intraday resistance period at 29.80, which is very concerning on the backs of those two negative economic reports coming out of China and the UK specifically. And then right here on the cash open, you just see the traders lock in profit coming out of that. So yeah, I mean, the economic analysis, the technical analysis, all kind of lead to that conclusion that you're not seeing a lot of strength coming out of what happened with the G20.
Mark, red candle up on a gap out that hesitates here. Obviously, we're still above all the moving averages. We're now heading into July. We've got earnings season upon us, the June trade war stuff. This G20 thing was everything everybody was waiting for. Positive resolution. I would have expected better price confirmation and follow through. Marky, what's your take over there?
Yeah, I don't think anyone didn't think that there was going to be good news this weekend. I mean, I don't think this comes as a surprise. You know, I don't have a whole lot to add to what Matt said. You know, it's like we were joking before the meeting is like, well, now all the market has to do is focus on crappy negative guidance and crappy economic reports. Like, what's the market going to focus on? What's its excuse? What's its catalyst? I mean, hope of the Fed cutting rates and hope of the positive dialects what sent the market up, you know, the last 3 weeks. Mm-hmm. What's going to take the next leg up? I don't know. I don't see catalyst.
Cody called me on Saturday as he was getting ready to do the Forex report, and he wanted to get my take on the G20 reaction. And I said this to Cody. I said, Cody, my take on it's very, very simple. A lot of the market expected positive news coming into that, but the positivity is going to be limited because a lot of it's already baked into the price, right? And that's kind of what you're seeing play out today off the futures market is there wasn't a lot of surprise here, guys. I mean, all the news coming into the G20 was that they were going to have a ceasefire, and that's what they had. They had a ceasefire. The only real surprise here was Huawei, purchasing U.S. products. That was really the only surprise here, outside of Trump's meeting with Kim Jong-il the second or the third, I can't remember anymore, but that was really the only surprise coming out of the G20. There was no surprises economically here. The only surprises were political.
Yeah. Yeah. And right now it's going to rest on the laurels of the price action. To me, again, like I said a minute ago, 2960 is going to be significant because, Matt, that's the old resistance, new support. And on the intraday, you're even seeing a line in the sand form here on the 30-minute chart. You'll see that rising moving average. You've got old resistance levels back there. And that was the support point on the futures market on Sunday that we came into. Here we are, guys. I'm going to ask you by the bell, if you close below that, do you expect a deeper retracement through the week? Does that matter to you as much as it's mattering to me right now, Matt?
It absolutely does. I mean, when you have a felt support level, typically you go find the next level of support. You're like stepping down the stairs. And this resistance level, Tim, that's the all-time high resistance level. And so when you're talking about this resistance level at 2960 and you gap over that, and look what happens on the gap. You gap over that, immediately retrace back down, and then what happens here? Well, right here, you start having that negative type Chinese news come out, and yet the market held its support level at 2960. So and guys, this Chinese PMI report 2 times in the last 6 months has caused a lot of volatility on Sunday. And you saw that start to occur here, but yet that technical level holds, and then you start rising back up, and now you're retesting that. So yeah, if you close underneath 2960, I do expect lower prices coming into Tuesday and Wednesday.
And by the way, welcome out Halftime Crew. It's always good to have you guys here on a Monday morning joining us. Team Tackle in the chat. If you give me just a quick, hashtag Team Tackle in there. If you are new to our channel, never seen it before, we do this show daily. And we love it. We love coming together, talking about markets, all those kind of things. Subscribe, like our channel, get those thumbs up there. Selfless plugs here, Matt. There's no doubt about it. I like to promote what we're doing.
We do a free show for our community. You can selfless plug all you want.
Damn proud of it too. All right. There's a lot of companies out there grabbing my attention here. Don't want to go through 100 companies now because I want to go through all the indexes and the sectors, but a few stocks on the S&P, Matt. Wynn Casinos, #1 gainer here today. Trade resolution out of China, you would expect. And it goes back to the logic, Mark, you talked about for the last 3 months. Anything to do with the trade war. If you get positive trade war news, those companies are going to run. You get negative trade war news, those companies are going to fall. Wynn Casinos does so much business in Macau and internationally and in the East, Matt. That is a reversal signal, in my opinion. Matt, I like it here. I'm putting it on a bull watch list. Give me a read on it.
Well, #1, companies that have the highest Chinese revenue exposure, Tim, Wynn is #2 on that list. And so Wynn Resorts has a 75% exposure to the Chinese trade war. And it's same thing with like Las Vegas Sands and any type of gaming like MGM as well. So Las Vegas Sands, MGM, Wynn Resorts, they're going to have a lot of exposure, both good and bad, to this Chinese, trade war. And if you do remove some of the restrictions from that trade war, and you start to see a little bit more, discussions that lead to a conclusion of a trade agreement, whether that's 6 months or 18 months or 2 years from now, companies like your Broadcoms, your Intels, your AMDs, your Microns, your Las Vegas Sands, your Wynn Resorts, your MGMs, your Marvel Technologies, your Qualcomms of the world, your NVIDIAs of the world, Applied Materials. These types of companies have a tremendous exposure, both in terms of return as well as risk. And so obviously on positive news coming out of China, we've seen this before. When gaps up, when gaps down, you're definitely seeing a reversal type situation on the daily chart where you have a left shoulder, head, right shoulder, and then you break out of the neckline here. That is a bullish reversal from a short-term perspective. And before you get all crazy about it, you got to look at that weekly chart, and you got some mixed reactions obviously over the last 8 months, year with Wynn Resorts from that Chinese exposure. But you do start to see a little bit of a higher increasing pivot, and then you're now hitting into that resistance level on the weekly chart right about 134, 135. So 134, 135 on Wynn, and that's kind of where you're seeing it right here. That is going to play a role given the fact that it was this old resistance level over here. But if you can get back up above there, set a new high around 140, retrace back down, test that, yeah, I'd be interested in that. But I got to see a little bit further price action here first.
One of my favorite companies on the bearish side of the S&P, Freeport-McMoRan, copper, and gold. I got to tell you, dollar up, gold pulling back here today. We'll get into gold here in just a minute, Matt, but this is not a good-looking pattern. Mixed at best, in my opinion. Holding the moving average, but down about 3.5% here today. Copper company, sensitive to China. Gold is probably the reason why this one's moving. Give me a read on that chart real quick.
It's first and foremost, it's underperforming what gold has done in the course of the last month and a half. So that's number one. But number two, I mean, what you saw last night, and gold has not, and let me be clear here, Tim, the dollar is up today, but it's up today for a vastly different reason than gold is up or gold is down. Gold is down because when you remove the Chinese trade war from the equation, there's a risk on environment to a certain extent. And so gold gapped down on the futures market, as you can see here overnight. Gold gaps down on that futures contract, and so it gaps down not because of what the dollar did based on the PMI report. When you look at the United States dollar here today, and I just want to, kind of use this as a little bit of a teaching segment as well. When you're looking at the dollar's showing tremendous strength here today, up about a little more than 0.5%, which is a really big movement on the dollar. And you think, well, man, I mean, that futures market and that G20 must have really had an impact on it. And it did have a slight impact on it, Tim. There's no doubt about that. But here's what happened this morning as the overnight is coming down. Over right here, you had the PMI report come out of the U.S., which beat the expectation and was much, much, much better than what we saw out of China and out of the U.K. So the dollar's up tremendously today based on that economic report that came out this morning. But when you look at gold's chart, gold/GC here, gold starts gapping down right here out of the futures market last night. And then when that report comes out right here, Tim, it stabilizes. And so gold is not down because the dollar is up today. Gold is down because gold is one of those safety plays that we go to when we're a little bit scared of risk. And so with the positive news coming out of China, you just saw a little bit more of a risk on perspective in the futures market. Gold gaps down off of that. The PMI report comes out here and really has absolutely nothing to do with what transpired over the weekend. I still like gold here, and I was talking to Mark about it. Mark wants a deeper pullback here, and I could certainly understand that. You give a nice pullback down into a rising 20-day moving average in a bullish uptrend, that's a standard bullish retracement, but you still have some pretty significant triggers if we don't get that retracement. If we can break back up above the gap range here, which just coincides about 1402, and then you have an intraday resistance right here at about 1400. So if you can reclaim that 1400 by 1402 range, you should be back up into this 1420 by 1425, which would be a very good day/quick swing trade. And so you might get that retracement on gold, but I'm still looking at that 1400 by 1402 level as well.
Mark, let's get your analysis on commodities here and dive right into all this gold and dollar talk. I know that you do the commodity report over there at Tackle Trading. The depth of that pullback is going to matter. We're at 1392 on gold here. We hit a high point at 1442. I think what Matt's talking about, finding intraday triggers, very, very important and part of the bullish retracement system in our step system, Matt. You could apply those techniques right now. And if you're a pro member at Tackle Trading, make sure that you review those step system modules. Mark, where's gold to buy for you?
Well, I mean, first of all, everything Matt said from a trading perspective is absolutely spot on. And so you have to ask yourself, are you looking to trade gold or are you looking to invest gold? As far as buying gold, I'm not interested in buying gold unless I have a much, much deeper pullback. And there's two reasons right now. And first of all, I've been a fan of gold and blah, blah, blah all year long. There's two reasons. One, the two major catalysts for gold's upswing in the last 3 weeks have been anticipation of the Fed cutting rates and the trade war. Now, there's a little bit of cold water on both of those catalysts right now. So unless you get a spark there is a chance that gold slides. Now, any given day, dollar could go down, something could happen, stabilize, provide a very nice trading signal. But when I look to invest, I'm a value investor. I look to get it at cheaper prices. So in order to start selling puts, I need a much deeper pullback, because those catalysts right now, they're just a little soft right now on gold.
Yeah, they have been soft. There's no doubt about it. The dollar obviously rallying is going to bring gold back. The trade war stuff is going to bring gold back here. So continue to watch it for trading signals. Investing mindset and trading signals are different things. Gold miner ETF here, Matt. I do like GDX for many, many different purposes. I actually think it's a really, really good boomerang trade when the setups are there. Bringing that chart up, you can get some naked puts on here. 46 days out, 21 delta, pick up 30 cents credit. I bet the margin on that, it's pretty decent, 7-8% ROI, I'm guessing. What's your read here on GDX, Matt?
I think the best way to play GDX here would be a naked put. Cash flow, just in case if it comes down, you get to buy a great instrument that's in a bullish uptrend. But when you're doing something along those lines, you really want to find some support level that you're comfortable buying at it. You do have a rising 20-day at 25. But I'm really looking at this like 23.5 by 24 range right there. Issuing a naked put down at those range at about 23, you can pick up 30 cents, 29 cents. On buying power, it's about an 8% ROI. It's not a bad way to play a gold pullback.
Yeah. Move on to the Dow Jones Industrial. I got a lot of charts I want to look at, and I do want to have about 5 minutes of rapid fire at the end. I know that people love that, and I do love it as well. Dow Jones, Matt, no real difference in the price action in the S&P except for one thing, and that is this red candle that is backfilled on the intraday has actually come below the previous pivot point. Is that significant enough for you to call it a different signal here on the Dow?
No, I mean, very similar to what we were seeing on the S&P. Gap up, runs up, kind of consolidates. The PMI report comes out right here. Cash open right here, showing weakness after the cash open. Difference is S&P's holding right there versus the Dow is coming back down into the breakout channel. So it's going to be a fascinating next few hours in the market, Tim. If you can't reclaim some of these intraday channels, you should see some negativity coming into tomorrow.
Yeah, in fact, you might even see negativity into the close. There's no doubt about it. Volume at the open actually brought this thing all the way back down. You're now below support. There are some good-looking charts on the Dow. One of them, Nike and Apple, they both kind of moved up. Apple, to me, was interesting this morning. I thought it was going to run a little bit here, Matt. Nike hit a resistance, came back on the intraday. You had earnings last week, so I do like that. Look at Apple, though. I think Apple might be a much more difficult read. It is for me, at least. This morning when it was a green candle, that was a breakout. I was interested in going long Apple. I waited for some intraday price action, did a day trade on it, but now I'm out of it. And now I'm looking at it with no position, no read on it at all. Give me a read on that if you have one.
Hold 200. I mean, 200 significant hold number is the top of the base right here. And now you're kind of testing that level on the intraday right here with Apple. A hold above 200 with a nice upward movement in price. I could see, a bullish trade coming back on. But this is what I saw a lot today, Tim. Like I was going through almost every one of our bullish reports this morning, and a lot of them gapped up above triggers and then faded back down. And so I saw this almost on every trigger. Gap up, fade back down, reassess. This is still bullish, Tim, even though the intraday is negative. As long as you stay above 200, you got to be bullish here, looking for a buy if you track Apple. So keep an eye on 200, but this is what I saw a lot today. Triggers need to be adjusted and updated.
If you're a short seller,
will you go to a 15-minute chart, 5-minute or 15-minute chart? And let's just go to the market open here. My personal technique of getting into breakouts is I wait for that first 30 minutes of price action and then play a break of the resistance. It saves you so many headaches. So many headaches on these gap ups, especially at the start of the week. Those people in the traders lounge, they'll nod their head. They're like, we can't count the number of times, especially on Mondays, where things will gap up, but it won't clear that first 30 minutes of price action. And boy, it is just that technique so many times this year. Just that simple technique. Wait for the first 30 minutes to pass by.
It's a very similar technique to waiting for confirmation, right?
Yeah, just wait for the first 30 minutes.
I mean, it's an aggressive intraday move, but I mean, almost every trader in the world will be like, okay, confirmation is not the test above resistance, guys. confirmation is the close above resistance.
Mm-hmm.
And so for a lot of traders, they're looking at this and they're saying, okay, I'm not into it yet, but if you do close above 200, I'm going to update those triggers.
Yeah, but what happens with new traders is it goes up above the breakout point. They're like, oh my gosh, I'm going to miss out. I got to get in right now.
Well, new traders chase every shiny new object.
And so it's like that fear of missing out, which is so powerful, like so powerful in playing with one's emotions. Be a little patient. Just have a rule.
Mm-hmm.
I mean, I know my personal rule is I don't trade in the first 30 minutes. I wait for confirmation of the breakout. Every once in a while, something just runs. That's fine.
Well, and you're also talking about that first 30 minutes of the cash open, which is typically one of the most volatile moments of the entire 6.5 hour trading day. So if you're tracking the trading day and the volatility of the trading day, you got the first 30, you got the last 30, then you have everything else in between. But those first and last 30 minutes, those are very, very telling to the marketplace. And when you saw the futures markets kind of fading up coming into the cash open, but the cash open showed some weakness, typically on that, you see that momentum follow throughout the rest of the day.
You know, markets are up, markets are bullish. Apple's still up here today, but none of the signals, none of the price action like you guys are talking about is giving me a lot of confidence heading into the back half of this day and even tomorrow. Now, obviously that can change. You're not getting a lot of volume on these sell-offs intraday, but it's not really good looking charts. Going back to some Dow companies as well, Matt, Boeing gapped out and started to look like it was going to run up to 380, but you just got a complicated chart. Now it's all the way back down to 358, sitting in the middle of a 4-month range here with continued news around the 737 Maxes that they may not get
It's
them
not
out
even
in production.
737 either.
Yeah.
I mean, that's not the news that came out last week. We saw some negative news come out on the 737 last week, but the Dreamliner is now being investigated. And so 787 Dreamliner is now, you know, there's some, you know, I'm trying to find the right word so I don't sound offended, but there's a lot of, you know, smoke there. And so this is still a stay away from me. I just, it saddens me that a company that I like so much has made so many mistakes in the last 6 months.
They have made quite a few mistakes, and now it's back middle of the range, not looking great one way or the other.
The mistakes are so great, Tim. I would consider firing their CEO.
It's been bad. I mean, the stock price has suffered, the company has suffered, their image has suffered, public relations have suffered, and
well, that's what happens when you lie to consumers about air travel.
Yeah. Yeah, no, that's one that you got to build trust in. There's no doubt about it. Moving on to the NASDAQ real quick. Let's keep working through the markets one step at a time. NQ contract. And again, I mean, just not a very impressive follow through, guys. You can't really get excited about these big companies right now. I'm seeing some interesting charts. There's a lot of tech companies I'm going to be paying attention to, and I will trade signals on if I get them down the road. But I'm looking here at a Monday morning intraday, and I'm not seeing a lot of stuff that gives me inspiration to want to go out and buy it, Matt. It gapped out again, but now it's back to where we're only up 1%. 1%'s a good day in the market, don't get me wrong, but that candle price action does not inspire me.
No, it does not inspire me either. I mean, you're looking at an inverted hammer type candle, you know, as on a test above resistance, but you're still up 1% on the day, number one. Number two, the existing trend was bullish coming into it. So I don't want to throw too much cold water on bullish trading this week just simply because we have one candle that's 3.5 hours into the trading day. You know what I mean? I mean, we're still bullish on the day. That candle's ugly, no doubt, and we should see it continue to come back down. But there's still some really, really good bullish trades out there. Just because we're not seeing it on the index doesn't mean they're not out there.
Yeah, no, that's true. They're not really in the big names, though. I got to tell you, Facebook, Amazon, Google,
no, they're
Microsoft. I'm not seeing them there.
They're absolutely not in the big names. You know, absolutely not. But you know what they're in? They're in this, bro. Nice little gap out, run. That's a scouting report pick. IR. Nice little gap out, holding resistance. Still good trigger above that high. Looking at Pro, okay, still a retracement, still holding its 20-day moving average, still legit. Adobe, gap out, holding its doji at resistance. Maybe you wait to trigger above 304. Still really, really, really good. CDNS, gap out, run. Look at Lockheed Martin, gap out, holding its breakout of the high base. Oracle, gap out, run. So, Tim, that is 7 stocks that I pulled from the scouting report from this week. So even though everything you said on the market is legit, I get it. Those scouting reports still look really good.
Oh, there's always something to trade.
Well, that's my point.
Yeah.
I mean, we're sitting there so focused on, oh, the cash open was slightly negative and people are, locking in profit off the gap when we still have a tremendous amount of good bullish trades here. I'm still bullish on the market, guys. Based on
I am as well.
Everybody said here, I'm still bullish on the market, and I'm not going to change my bias to the market simply because we have profit taking in 3.5 hours from a cash open off a G20 summit hearing.
Moving on to the Russell 2000, one really interesting area of the market in the short term has been these small cap companies, Matt. It actually outperformed on Thursday and Friday. Real negative here. I'm still neutral on this one. Do you have any other read than that? I know you got an inverted head and shoulders a little bit developing there, but long term kind of a neutral range.
No, long term you're neutral here.
Yeah. Mark, small caps, this whole thing with the trade war, how is it going to impact small caps? What's your read on small caps?
Until it breaks the range, how can you have any other read? I mean, it's just been meandering all freaking year. But it got a little bit of boost like everything did when Powell pivoted in January and the market went crazy. But boy, it has been a great cash flow system. I mean, the iron condor for cash flow.
6 months straight of cash flow on the cash flow condors, guys.
And it goes to show about systems on that. Matt, last year in the fourth quarter, it was a rough system for a couple of months in the short term. But if you know your systems, you know your rules, and you know your application, you're supposed to continue to trade a system like that. And so you had a 3-month stretch where it was pretty tough when the market went through that V-shaped sell-off and then rally. And then now it's been 6 months in a row where it's been pretty easy.
Well, I just go back to what Tyler said after Trump's election in November of 16. And, that following month from November 9th until really mid-December, the market went up 10% and had a really, really good run up. And it blew up every bear call side of cash flow condors. And I still remember Tyler's Tales of a Technician that he wrote in December of that year, what I learned from Trump's election. Nothing. It was one bad month. And if you overreact to that, you missed out on the next 10 months of cash flow. And if you overreact to any 1 or 2 months, Tim, you miss out on why the system is there. Systems don't work every month. Systems don't work every trade. Systems don't work every single moment of every single day. Systems and probability work over time. And if you capitulate simply because you had a bad month, then you're not a trader. That's period, end of sentence, Tim. If you give up on a system because you had a bad trade or a bad month, or you made a mismanagement decision or whatever the case is, you're not a trader. Traders work over time. Probability works over time. It doesn't work every time.
That's right. Crude oil is the next one I want to look at. We've already talked a little bit about the dollar and gold and whatnot. So we're going to go through crude and gold, or not gold, but Bitcoin. Actually, we're going to talk about it here in a minute. Crude oil, Matt.
Analyze the dollar, bro.
I'll bring it back up. I thought you already looked at it, didn't we?
No. I just showed the price action very quickly.
Yeah.
Obviously, what I talked about earlier today, guys, dollars up based on right here. This is the PMI report coming out of the U.S. Positive on the economic report. That economic report came in, and I want to give the accurate numbers here, Tim, but I believe it was 51.7 versus the 51.3. But what out of all 3 PMI reports, China, UK, US, in the last 24 hours, the one thing that stands out to me is, and this isn't just from a PMI or a dollar perspective, it's absolutely everything. It's the S&P, it's the dollar. They're still the king. Maybe they're the king of rubble, but they're still the king. The U.S. economy is still the king. The U.S. dollar is still the king, and that's what I kind of just read from those PMI reports. And the dollar is showing tremendous strength coming into that intraday, and should consolidate and form a little bit of a base from the intraday perspective. If you're looking at this from a daily perspective, one thing that's interesting is you did get back up above 96.5. On that report, you're coming into the decreasing 20-day moving average, which just so coincides with a little bit of resistance over here at about 96.80. So keep an eye on what the dollar does over the next couple days. I still have a slightly bearish rating on the dollar, given the fact that our pivot relationships are still decreasing. However, this type of movement, we've seen this before. You saw it right here. You got into resistance, and look at the next leg down. I still believe that we will have another leg down in the dollar. It's just not going to be today. So keep an eye on that. Also, Australia reports monetary policy later tonight. So if you're day trading, you're swing trading, keep an eye on the Australian. The Royal Bank of Australia announces monetary policy, and I believe that's somewhere around midnight Eastern, but I'd have to double check that.
Do you think the dollar move here is a move back into the carry trade, Matt? Because I'm seeing the yen down sharply. I'm seeing the dollar up sharply. I know that the yields there, treasury yields on the bond market are changing here today as well. Do you think it's just a retracement here, reaction to the news? Could it be a carry trade thing?
No, I don't. I don't think it's a carry trade. Carry trades are long term. We're talking about a movement on an intraday time frame off an economic report. You can't get away from why markets move at certain time periods. The PMI report came out literally right there. Price adjusted after that. That is a singular moment in time. It looks really good on the backs of the risk on type scenario. Positive PMI report, but I still see this as a little bit of a retracement, very similar to what we saw here when you had that little consolidation, had a positive economic report here, gets into overhead resistance, and then you see that next leg down. So you can't deny the strength of the dollar here today. There's no doubt about that. But we're still talking about a PMI report that was 51.7 and not 56.5. So it's not exactly like it was a great economic report. It's just great in comparison to a 48.0 rating on the UK PMI and a 49.4 rating on the Chinese PMI. So you had a lot of movement based on the fact that you just had a positive economic report. Keep an eye on how the dollar comes into resistance, because when you're looking at some of these cross pairs, Tim, euro slash US dollar, excuse me, let me get that here, euro slash US dollar, yeah, you're seeing a little bit of a similar action. But Tim, if this was a stock, you would say, give me a doji. Yeah. Right? I mean, that's what you would say. You would say, give me a doji. When you're looking at the US dollar slash Japanese yen pair, you know, obviously the dollar's going to come back up in front of the yen, but you're still over the overall trend is still fairly bearish here. You haven't broken out of that resistance yet. So maybe at worst you call the dollar neutral against the yen. When you're looking at the dollar versus the Swiss franc here, you're seeing a very similar type movement here, but look where it's coming into. It's coming smack dab right into the old level of resistance. You have a lot of resistance right here at 99 as well. So you have an overhead resistance. If you had a doji here followed by downward movement in price and you took away that symbol and replaced it with absolutely anything else, you would say short.
Yeah, that's right. And the dollar move, the size of the candle obviously makes you want to wait for the doji, wait for the trigger candle, that signal candle, confirmation candle. We need a little price action to set up through the week. There's no question about it. There's a lot of interesting currency
strength in
pairs.
The dollar, wait for it to slow momentum, no doubt about it. But one day does not change a trend.
Crude oil is next, as we always look at this one. Obviously, the biggest, current commodity in the world by trade, by volume, by importance. And there was some news out of the OPEC over the weekend, Matt, that they were going to cut some supply numbers and production numbers and whatnot. Mark, I do want to get your take on crude oil. Obviously, you are my crude oil guy. Like everybody, every trader I know watches crude oil like a hawk. Mark, but you did the commodity report over the weekend at Tackle Trading. What breakdown do you have for our team out there?
Yeah, I'm starting to become useless on stocks because I spend all of my time analyzing commodities these days. I love it. This is where I'm happiest. Like if I have my happy role and get to choose, I'll invest like commodities to the end of the time. Listen, OPEC came in, they agreed to cut production numbers. Of course they did, because the Saudi princes need their big luxurious pensions and all of those things. Not a surprise. I've been talking about it as the basis for my boomerang trade in oil for a while now. But once again, boy, is today just the, buy the rumor, sell the news day type situation. Wait for a little bit of pullback. It's not in a great trading place right now because there's still all kinds of nonsense going on. But if it pulls back a little further, once again, I'm then excited to sell more puts. We have that confirmation that Saudi Arabia, Russia, the OPEC, and the non-OPEC nations are going to, every time oil drops, they are going to commit to stabilizing production numbers. They have shown this now time and time and time again. So if we get a price drop, looking to acquire it at bottom levels would be exciting. As far as upward movement, as far as trading things, we got a lot going on in the oil market. We need a little bit more stability right now. It's a really tough trading pattern right now.
I think it's literally stuck right here at 60 until we get some kind of volume confirmation, Matt. We're talking about the 1st of July. Driving season is already come and gone. Seasonality is mixed here in July for oil. You're at a price level that could go either direction from here. It didn't run on the news yet. Dollar is up. Oil is holding itself a little bit, which adds a red flag or even just a little complexity in that chart. I like a bi-directional setup, something up or down, but I'm waiting for this little candle consolidation to actually confirm and start to move for me to take a trade direction on oil.
I think you got an interesting setup on oil going on, and I kind of like what I'm starting to see. It leads me to K trade, right?
Yeah.
I mean, that's what I'm really seeing here. You got real tight consolidation between 58 and 60 here on oil, and that just so coincides with almost every level of support and resistance over the course of the last 3-4 months on oil. You can see old resistance, new support, old support, new resistance, new support. And so you have a really interesting setup here. The short-term price action got overextended to the point where you really form in this, what you can call a little bit of a base pattern. It would be a high base because of the preceding price movement was up. So you have a little bit of a high base type situation. You get a close above 60, price should appreciate into 64. You get a close under 58. Nobody's going to be surprised if it retests that 54 handle right here. So even though, there's nothing to see here until we kind of get out of its range, I see a few scenarios here that could be a really good trade, either above 60 or under 58.
Yeah. By the way, the market is continuing to sell here intraday. We're going to break down all the sectors right now, but give me a quick peek at Bitcoin. The Bitcoin volatility has been incredible. I finally got stopped out, by the way, with my trail stop back there about Thursday morning with that big red candlestick. Didn't catch the entire bit of the upside. You never do in a trade. It ended up coming back. Give me a quick stop out. C'est la vie. You're moving on. But now you've got a bullish retracement, Matt, from a chart itself.
Hold on. I could see the emotion here. Okay, and this is Bitcoin 101 in the last get stopped out. Oh, thank God I got stopped out and made a little bit of money. Next day, damn it. Next day, yeah, I'm glad I got stopped out.
Yeah.
That's Bitcoin in the last 4 days.
Tim had dreams of Bitcoin going to 100,000 with his trailing never being hit.
Yeah, it's going to 100,000 without any pullback.
Listen, we're all human. It's understandable,
He was celebrating at 14,000.
But that's what happened. We've seen this in Bitcoin and gold. When you have this huge spike, FOMO in rally, people lose their minds. And then people come in and say, I got to get in. Tim got in at much lower levels in a much more sensible thing. And then he caught that run. He wasn't entering at the top. He caught it at a reasonable trading zone where it had it was a nice trade setup. Both Matt and I said it was a nice trade setup.
Yeah,
But then people, there were people that bought Bitcoin last week at 13, almost 14,000.
Who's going to complain over making $2,000 on one Bitcoin in the last 4 days? I mean,
but there were on Thursday, there were people that came in and were buying at close to 14,000 because Bitcoin's going to go to 20,000 again. It's just find the right setup. The fear of missing out is a real thing.
FOMO is real. There's no doubt about it, but you have to trust your rules. I mean, the way I play momentum like that, I don't just take my profits on the first target if I've got a good trade developing, Matt. You got to catch those trends. And my first target was 10,000, and at 10,000, I moved my stop loss, and that was it. And then it kept running. It hit all the way near 14,000. And obviously, you have those moments where, especially when you're new in trading, where man, I should have sold it up at 13,900.
I called the target at 13,915.
Well, you nailed it then, Mark. I didn't get that text message from you. Where's that on my phone?
It's somewhere there. It's buried in all your.
Mark shorted the tick.
Oh, did he?
Yeah, that's what he did. He shorted the tick.
Hey, c'est la vie. I'll trade it again, by the way.
He was also the one that shorted Tilray at 300.
Yeah.
On the tick.
Right on the tick.
On the tick.
Yeah. Pullback doji confirmation. I will trade that again, Matt.
Yeah. I mean, I won't. I don't have the time to sit here and day trade it the way you do, but that volatility though, Tim, the last 4 days, how do you trust anything? And seriously, be honest. How do you trust anything?
Yeah, because when you got in the trade, the candles were very sensible.
It was a different trend.
Right now, it's just crazy times.
Okay, so here's Tim's breakout. Here's Tim's trade. Broke 9,000. He triggered right here. Okay, you can see my little line right there. That's where he got in. Put a stop loss right underneath $9,000 right there. That's a nice breakout, solid trend. You're adjusting stop loss underneath the lows, underneath the lows, underneath the lows. Come to the next day. You're adjusting your stop loss underneath the lows, underneath the lows. Fantastic. Next day. Yeah, we see this with Bitcoin. Get stopped out. Let's see how it reacts at 10,000. Give me a doji at 10,000. And then you see that. And it just becomes so difficult to trade from any system perspective, Tim. To me, if you're trading Bitcoin at this point, you're gambling right now until you see volatility slow down.
Oh, no, it's not an entry point yet. There's no doubt about it.
Give you a doji, slow it down for a few days, make $10,000 confirm. It's obviously going to play a support role.
What a fascinating product, I got to tell you. I mean, it's obviously crazy right now. When you've got 10, 15% moves day over day over day over day as the market's trying to figure this whole thing out, it's obviously gone parabolic, and it needed to slow down, needed to settle in. There's a reason why the candles were the size they were, Matt.
Yeah.
You know, it got out of hand. There's no question.
Well, what's your take though on Coinbase? I mean, that's what really kind of created the volatility when people couldn't get access to Coinbase.
Well, they're the biggest company that we know in the U.S. By trade. Obviously, you're not going to like headlines that have any kind of sense of risk in it. I don't really think Coinbase is going anywhere. I think they're going to settle in and be fine. They're Yeah.
The point is, if you go to Wells Fargo and try to get your money out of the bank and you can't get your money out of the bank, it'd be a run on banks and you would have massive hysteria. But all of a sudden, Coinbase comes out and, a couple of days later, like, yeah, that's okay that you're going to get your access to close a trade in Coinbase or close an investment in Coinbase. Think about that for a second. Think about the psychology of that. Let me make a trade in TD Ameritrade, but not be able to get into TD Ameritrade to close the position. You would lose confidence.
I once, when I was playing poker for a living online, I had a nice run on an online casino and was up 15, 16 grand. And, I went to, take out 10,000, got to pay for my living. And I had a damn hard time getting that money. It was like I eventually got it. But do you think I ever went back to that casino again? No.
Never again.
So how long was Coinbase down and why?
Terrible.
Coinbase, I don't know exactly how long Coinbase was down, but there were people trying to close positions that couldn't.
Close their trades or to pull money out?
Pull money out.
I see. And they couldn't get it.
And Bitcoin's coming down $2,000 and they can't pull their money out.
I'm also reading that a Korean bank clamped down on...
That's not good. A lot of Bitcoin traders in Korea.
The headline's a major Korean bank clamps down on crypto-linked accounts.
I get it.
Are government ever going to allow cryptocurrencies to really succeed?
They're going to adopt it at some point. What do governments do with any successful technology?
They'll adopt blockchain. Doesn't mean they'll adopt crypto.
Yeah, there's a big difference.
There's a difference. Libra, that's a different story. My whole point is, Mark, exactly what you just said. You never went back to that casino because of the difficulty in getting access to the money, because it sparks a little bit of fear that, oh my God, if I give these people my money, I'm never going to get access to it. And even though that you got your money and even though it worked out well, that does lead people to a loss of confidence. When you saw a run on banks in Greece and Italy and Cyprus in 2011, 12 and 13, it's not exactly like people were running to Greece and Cyprus and, to go put their money in those banking institutions. So it's same thing happened in 2009 when we almost had a run on banks in Philadelphia. So to me, I would not feel confident at this point until we start to see the volatility subside.
Yeah, I'm willing to trade it because the position sizing with risky assets like this, I just keep it so small, Matt. I'm literally willing to risk, half the position, if not more. So craziness doesn't scare me off of that part of it, but that's just position sizing. It's a very aggressive, very speculative.
I'm not talking about a trader that's in a trade for 30 minutes, Tim. I'm talking about people who have money in a bank, and Coinbase is a bank.
Yeah. I still have money in Coinbase. You know, I didn't see all of the news on that because I don't try to pull my money out of it day over day over day over day. But that's not good. You don't want to hear that. I mean, because I believe Coinbase was the first place you opened up with as well, right?
Yeah, it's 2013.
Yeah.
Yeah.
It's what got people excited about Bitcoin back in the day. All right. Anyway, Bitcoin, we'll come back to it. I'm sure we'll talk about it.
Keep an eye on 10,000. It's going to be interesting to see how it performs around 10,000.
I think that's the level. Matt, give me a quick rapid fire through the sectors, if you would. We do that each and every Monday. I noticed that obviously the healthcare sector was the top rated over at Tackle Trading, 20-yard line, I believe, and whatnot. A couple others right in line with the market, the 25. Give me a quick look at all of them if you can.
Absolutely. Very quickly here. We'll do a rapid fire through the sectors very quickly. First and foremost, we always start ranking with the S&P 500. When you're looking at the S&P 500, given the fact that we didn't see this candle coming in, we didn't know the news coming out of the trade war, we kept the S&P. We liked what we were seeing there on the chart coming into the G20, kept it right there at a 25 ranking. Let's go through the aggressive sectors very quickly. Basic materials. Basic materials got the biggest upgrade of the week, Tim, given the fact that we were breaking out of this resistance right here at 58 on Friday. Obviously, a little gap up today, a little fade back down. Keep an eye on how that works. But we went from a 40 ranking up to 25, so a 15-point upgrade in the basic material space. Its twin sister, the energy space, really kind of kept the same ranking right there at 50. You had short-term price action coming into an overall resistance level, but a lot of mixed, type of action when you're looking at this overhead trend. So we didn't feel comfortable putting into a bullish or a bearish type situation, kept it right there at that 50-yard mark. Looking at communications here, we did upgrade communications, liked what we saw coming into the market, setting a higher high, retracing back down into this cluster of moving averages, slowed its momentum on the downside, confirmed on Friday on the upside, and then the gap up out of the G20. And we had communications ranked very similar than we did the previous week, right there at the slightly positive bullish area of positive 35 on the scoreboard. Next up, technology, obviously going to get a nice little boost coming out of the trade war, positive news, but we did downgrade it slightly. None of us that were ranking them liked what we were seeing in this cluster here. A lot of volatility in terms of the up and down nature of it. So just a tiny, tiny downgrade to the positive 35 territory. So we're still slightly bullish on it. If we can close and confirm above that level right there, and you can put that right now at about $80. If you can give me a close above $79.50 by $80, you might see a little bit of price action in the short term coming into it as you're confirming above that previous level of resistance. Looking at the next sector, in terms of consumer discretionary, very similar to communications, very similar trend, very similar pattern, very similar confirmation. Got a slight upgrade into the positive 35 territory as well, as we like that retracement. We like those moving averages, especially the 20-period moving average crossing over the 50. That is a nice little bullish movement coming into it. Very similar to the other sectors we just looked at in terms of technology. Give me a close right there. Give me a close above that 121 level, and you should have some clear selling to the top side. Looking at the industrial, last of the aggressive sectors here, industrial sectors, you're looking at a lot of neutrality over the course of the last 3-4 months here, but very similar to what we saw in the other sectors, had a little bit of retracement as it's approaching that breakout. We do have it ranked right there at the 35, very similar to the other sectors because they were all looking very similar. One key difference, unlike discretionary, unlike technology, you have an overhead resistance right here that you have to be a little bit concerned about. And so keep an eye on this level at 79. You have the previous resistance at 78, but if you break out of 78, you have a little bit of a resistance at 79. 79 clears. At that point, you have clear selling to the upside. Moving on to the defensive sectors, and I'll start with the least defensive of the defensive sectors, and that is the financial space. And I talked about this on Friday, how the banking sector got a little bit of an upgrade out of the central bank by passing the stress test that the central bank had put out there on Goldman Sachs, Bank of America, Wells Fargo, Deutsche Bank, and all those other banks. They passed the stress test. That's kind of why you saw the price gap out of that 27.5 level. And with the financial space, we did upgrade it out of neutrality into the positive 35 territory. You do have overhead resistance right here on the financial space that it kissed off earlier today, right there at about 28. So keep an eye on how 28 behaves. You could see a little bit of consolidation. You could see a retest in that breakout channel, but you should have some bullish opportunities in certain spaces within financial. And that does not start with Charles Schwab or TD Ameritrade, your brokers out there. Those are still fairly bearish in my opinion, but some of your banks, some of your insurance companies, credit card companies, PayPals of the world, if we can clear out at 28, those companies should see price appreciation coming out of that breakout at 28. So we did move it up to positive 35. Moving on to the real estate sector. Mark said this about real estate. He loves what he's seeing here. He loves what he's seeing with the snapback retracement coming into the breakout channel. And if you see any type of fear coming into this market over the course of the next day, two, Friday, next week, I don't care when that fear comes in. We know what utilities do. We know what real estate does. Anytime we see a little bit of a retracement and then you get one news headline that sparks any fear, utilities go up, real estate goes up in that environment. So with utilities, we did downgrade utilities. We did downgrade real estate because of the deep retracements, but that does sometimes represent a fairly decent buying opportunity, especially if we get some degree of negative news coming out of those, coming out of the broad market itself. So keep an eye on real estate. Keep an eye on utilities.
If we slide a couple more dollars in real estate or utilities, I'll start my boomerang trade, because I don't believe for a second that the Fed ain't lowering interest rates at some point.
No, I don't either. We downgraded it.
Yeah.
We downgrade it in the face of the movement to the downside, a little sharper. It got underneath the 9 EMA, got underneath the 20 EMA. So even though both Mark and myself look at this as a buying opportunity in real estate and utilities, it did throw off the technical patterns just a little bit, and that does force us to downgrade coming into the week. So utilities, real estate, still two of the higher rated sectors, matching the S&P 500 at both a positive 25, but they both got a slight downgrade. Looking at the next the two last sectors, consumer staples, a bunch of food-based companies. Food-based companies, we kept it right there at the positive 25. I like what I'm seeing here. You're playing defense at the breakout channel at 58. It's really holding its intraday, and you're really looking at a little bit of a clean trigger here. If I can get my 30-minute chart to kind of pull up here, you got a little bit of a clean trigger to the bull side if you can clear back up above that channel right there at 58.50. So a close above 58.50 would be confirmation for me on this sector's bullish retracement as you're testing that breakout channel right there at 58. So keep an eye on 58.50 on consumer staples. I saw a lot of retracements in consumer staples that, if confirmed on this sector, would be really good trades out there as well. So keep an eye on that space. And then XLV here, Tim. XLV, we gave a nice little, we kept it at the same 20-yard mark. We didn't want to have anything too bullish, too bearish coming into the market out of the G20. But I'll tell you, Tim, as I was going through my process in the scatter report meeting, in preparing for the scatter report meeting, there was a ton of medical appliance companies like Boston Science and a ton of pharmaceutical companies that were really catching my eye. And I really like this space right here. So even though it's one of our highest rated sectors at 20, we didn't upgrade it, but I did like what I've seen in this bullish retracement. That is a bullish Harami candlestick formation, testing the high base breakout that you had here at 91.80 by 92. You get that hammer candle coming into it, and I just saw a tremendous amount of great opportunities out there in medical appliances and biotech specifically. And so, obviously, what happened with the G20 threw off triggers, but triggers need to be updated. Simply because the cash open wasn't what we wanted to see out of the G20 doesn't mean there's not a lot of great bullish trades, as I've talked about earlier today.
Well, I think there's tons of setups. I came back from over the weekend. I was traveling and went down to set up my weekly routine and go through my watch list and go through the reports. There's an incredible amount of good setups on the bullish side. And there's a lot of bearish setups I like as well, Matt, in this marketplace. There's no doubt about it. We're going to do a very short section of rapid fire. 9 symbols is all. 3 for each of Mark, Tim, and Matt and myself. Talking about myself in the third person there.
Before we do that, What does it say about me that all I am interested in anymore is gold and utilities?
You're old.
You're
wearing
old.
a beanie in the summertime. I don't know. I
Hey, let me
mean,
buy some
Mark's-
utilities
Mark's-
and buy some gold. And
Mark's turned into the, I only want to sell naked puts at a 10 delta. If I take possession, I'll do cover calls at a 40 delta. And outside of that, just give me gold, real estate, and utilities. Yeah, he's entered a different phase of his life.
want my iced tea on the porch.
first of all, that sounds awesome. Iced tea on the porch in the summer and getting dividends from the utility sector. Maybe it just means that you're wise, Mark.
It could be there's far worse trading systems than that.
There's a lot worse you can do. All right, guys, give me a quick symbols here. We got a bunch of them coming in, Matt. We're going to go through about 9 of them. If we don't get to your symbol today, we are back tomorrow like we are each and every day.
Donna really likes Micron here. We better start
Donna, Micron first. We got to give it to Mark. If we're going to look at Micron.
All right, so let's go age before beauty here. Mark,
Okay.
Micron.
Show me the chart. Listen, I don't trust any of this. I don't trust any of this. Okay, you got 1-2 punch on Micron. You got, okay, first of all, Micron's really associated with China, huge percentage. They got to bump up. I don't trust any of this. Micron's still tied to the economy. I like it for boomerang trade for the first time in a long time.
I could see a 36 naked put here.
I like it for boomerang acquisition. I don't like it for trading, though.
Just so happens to be the 20 delta. I didn't know that.
And that's the first time I've said that about Micron in like 9 months. So
by the way, about 6 weeks ago, we called a
$69
straddle on Micron that was perfectly executed.
That's right. It was perfectly executed.
AJG, Matt, is you.
AJG.
Yep.
AJG, give me a breakout, give me a run. I love what I'm seeing here on AJG. Bullish uptrend, bullish retracement, nice little piercing line candlestick, good momentum on the volume. That volume, and guys, that volume's fake. That's coming off the backs of the Russell 2000 doing its rebalancing. So don't believe that volume, but I do like the breakout here. It's breaking clean out of a resistance level at 88.30, 88.35. A close above that level, that's confirmation. I like that. I like what I'm seeing in AJG.
Absolutely. First Solar is next, and then Deere. I'll take First Solar here. You got to like the breakout. You got to like the uptrend. I wouldn't take a new entry point on a breakout up here. Extended above moving averages on that green candle from 2 days ago. And a doji, very little carry through. Personally, I would wait for a different setup on price action here through the week, Matt. Earnings coming out later in July, which means volatility plays could be in play. So a lot of things going on with that chart, but the simple thing is it's in an uptrend. Nice looking chart there. Deere, Mark, trade war.
Deere. Like,
first of all, you can't be the utility, real estate, sipping,
go back and look at 9 months of chart. It's a big meandering sideways mess. And
I'm just saying there's some inconsistency in your logic.
Maybe you need to go invest in GE for the
hippie.
dividend paying company.
I'm a city hippie. You John Deere tractor people. No, go back to the chart.
Is that your redneck impersonation?
I don't need an impersonation to be a redneck.
That's true. That's true.
I have redneck all throughout my body. No, go back in time a little bit. It's a big meandering mess, and we're at the top of the range. So until we can break out of 175, until we get something, this thing has been one of the ugliest charts as far as predictability, as far as it's just one big range. And when we get near the top of the range, I don't have any desire to add. Add at the bottom, sell at the top.
It's very rare you see a bearish engulfing candle that engulfs the previous 5 candles.
Mm-hmm.
That's
John Deere, because it's a crappy company to trade.
It is.
Good tractors, horrible
good tractors, good cash flow, good dividend, but it's not a good trade.
There's not many stocks I'd say is un-American to hate. If you hate John Deere, it is un-American. I will say that. I love this tractor company. Do not listen
to a damn word I just said.
W, also a great American company, Matt, Silicon Valley company, Palo Alto Networks. Security play here. Matt, you give me a read on this one.
Give me a straddle.
It's a really good K-trade straddle. And by the way, here's the thing, Matt, those Vega plays We should probably talk
Well,
about one or two of them here in the next couple of days.
here's why I said what I did, right? So let me get a little bit more bars here. You got an earnings coming up in about 2 months from now. All right. You have volatility that is at the extreme low end of the volatility cycle. You have a tight neutrality range between 196 and 212. You're currently at 202.
And you're about in the middle of that range.
And you're about in the middle of that range, right? And so you're in the middle of your range from the base you're seeing here. Any break of 213 or a break of 195 should see quick price depreciation or quick price appreciation. And so instead of K trading that, given the fact that we know volatility is going to build coming into the earnings over the next 2 months, given the fact that you're in the middle of the short-term range, I love a strangle here because of the high dollar of the stock. I love a strangle.
Straddle, strangle,
long strangle, 25 deltas.
Long Vega seems like it makes sense to me. Moving on to Slumberger. Velasco, one of our halftime crew. In fact, I'm seeing so many familiar names. The tribe and the team here at Tackle Trading, just incredible what we're doing every day. Larry, that's a reversal signal, V-shaped rally into resistance, crude oil dependent, crude oil sensitive. Mark, you have rules actually that say you don't trade these oil companies.
Yeah, I also have rules that Schlumberger, I don't trade unless I can pronounce the name correctly.
I say Schlumberger for 15 years. We literally talked about this on the podcast at length about how
it to make fun of me.
Yes, it is what it is. I like calling it Schlumberger.
It was my second trade.
So I just made it bad at jab when I was trying to make a jab at Tim.
Yeah,
no, it was the second trade.
Sorry for that side jab, Matt. I didn't.
That was friendly fire there, bro.
It was friendly fire. I also have rules against trading this crappy downtrend on any reversal. Go find me a reversal pattern that's stuck on this company in the last 18 months.
Yeah,
I will buy you a McRib.
If you can find a McRib.
Well, there hasn't been one, so I don't have to honor my bet.
Yeah, that's exactly right. You know, obviously the oil and the energy sector, you guys actually had it rated the lowest out of all the sectors, Matt, for a lot of the reasons we talked about when we were analyzing crude oil. So kind of a complex pattern there. And we've already talked Micron. We have not hit AMD yet. Daniel Sen, give me a quick look at AMD. Mark, chip makers, you love semiconductors.
Dude, I know. But like you guys, like I'm not the AMD fanboy everybody else is.
Well, you're missing out. Everybody else loves
I know AMD. Everybody else loves AMD. I mean, I've sold a few naked puts here and there this year.
Well, I currently have a naked put on this. So just full disclosure, just be aware that I already have a bias on this. So
but like you guys love this. You guys love it more. I don't dislike it. I'm not the fanboy everyone else is.
Yeah.
I don't understand how you can be such a fanboy of Micron for years, but not AMD.
Dude, BK, because Micron makes core, just good old salt of the earth fashion memory stuff. You know, it's simple.
That's Micron.
You're dealing with all this fancy stuff that, you know, you city folk use and you're.
Oh, so city.
First of all, wait. 5 minutes ago, you said that you were the city folk.
City folk use AMD. The good old fashioned Americans use Micron. Okay, I get it. I got it.
Oh, Marky. All right. We're going to have a fun podcast day. I can already tell.
I like AMD. I like AMD here. Obviously, I liked it a lot more back here, but to me, above 30 is important on AMD, and anything, you got to close above 31.25 here for something to be on the bull side.
Yeah. Travelers, real quick, TRV. I'll take this one. And actually, Matt, you take this one.
It's me, Travelers.
Yeah.
Love the consistency of this trend. Obviously, that little movement back there brought it back down in between the rising 20 and the rising 50. You've reclaimed that over the last couple of days. I like Travelers. It's a very, very consistent company, as you can see on this 20-day moving average, and that's currently where you are. So give me the probability of the consistency of this trend on Travelers. I like what I'm seeing here. 3
more, so we're going to quickly run through them. Matt, you'll be the last one. We're going to take Ally, McDonald's, then Lyft. ALLY, I'll take this one. Well, you got to like the breakout there, obviously. Red candle up here at the top. It depends on where your first target was. It's not a new entry, in my opinion, based on my rules. It would have been an entry back there about 5 candles ago. A candle like this, I trail stop on personally and kind of lock in some of that. I don't think you got to run for the hills just because it's a red candle. You are still up today. McDonald's for Mark.
Just trail stop on that.
Now, Mark, you got to love McDonald's at least, right? This is a company you love, and you're on mute, young man. My city hippie.
Yeah. Hey, it's a beautiful breakout. Listen, the whole market's selling off all day long. It's been just one giant sell off. Everything, all your big blue chips are going to go. Nice breakout, nice potential re-entry signal. This market sell off could provide a great opportunity here. I would love a little intraday resistance to form and play the breakout of that above the breakout level. So something to happen there. I mean, the market sell-off today is doing McDonald's, if you're not in for this a trade, because this is one of the better setups out there, doing you a huge favor right now.
Yeah, I'm not too concerned about that tick at 209. I think the real resistance Mark talks about is at 208.
And then last one, Matt, Lyft, and let's have you take this one.
Lyft, I got out of my Lyft trade on Friday because I wanted to wait till the G20 came out. I loved what I've seen on the confirmation. Say again?
You called the tick, right?
Let's see. No, I did not. I got out right. I'll show you. I got out right into that mess right there.
Yeah,
right,
just closed down ahead of a news event.
Literally like 5 minutes before the market closed is when I got out. I thought we were going to see a little bit of movement coming out of Lyft, coming out of the positive, what I saw in the futures market, but gapped up just a little bit, came right back down, kind of blew up all those triggers here. I think you got to reassess by waiting for a doji to see how the market's going to respond at this support level at 62 by 62.5. But it wasn't just Lyft that kind of saw that today, Tim. Uber did the exact same thing on its breakout. So it broke out. We actually had a trigger on the scouting report above this level. It has not triggered yet based on a 10% of the ATR above the high, but I would still keep an eye on Uber and Lyft to see how Uber really responds at 45. I know it's at 44.95, but I'd like to see how that responds to that old resistance here at 45. Same thing on Lyft, and I still think both are tradable if we do get some degree of support holding upward movements in price.
Go to the market real quick, 5-minute intraday, and then we're wrapped. We're already long here today. And by the way, thank you very much for joining us out here, guys, Halftime Crew, and everybody out there that comes and joins us on our YouTube channel. If you're watching this on replay later, give us a like, give us a comment, give us a share, do whatever you can to get the word of tackle trading out there. We love that. Matt, this has been a very orderly intraday sell-off all day long, just candle after candle after candle after candle.
But it's not been crazy, though. And that's why I get it. It's like cash open negative, cash open negative, cash open negative. We're still up 15 points on the day. Okay. So yeah, I don't see this as a sell-off. I see this as profit taking.
Yeah. Let's have a bet for golf. Now I'll let you pick which side.
You've been on the sell side the whole time. So I'll give you gotta give me, since you got the intraday sell-off most likely coming into the close, you got to give me
29.60 is the line.
No line. It's a bad line. I'm not taking a bet on a bad line.
It's a 50-50 line.
No, it is not. It absolutely is not. You have profit taken throughout the entire day. You've had selling through the entire day. That's not a good line. That's like saying if Miami plays New England on a neutral field, it's a zero line. Mark, what would be the line Miami against New England on a neutral field? 17?
No. It'd probably be about 13.5.
Okay, 13.5. So Tim's trying to give me a neutral field with a zero line so we can get free golf. I'm not taking the bet. Stupid bet.
Because the Dolphins are terrible this year.
All right. Mark, what about you? Over under 29.60 by the close, if you had to take one.
I don't take anything unless I'm getting odds.
They both pass, which means it's not a good signal.
I don't flip coins.
Yeah.
First of all, you're talking to somebody like Mark, who's a former professional gambler that handicapped football games, and you're talking to me who understands probability.
I don't bet small edges. I bet when I have a gigantic freaking edge.
And Tim's trying to get us to take a bet where he has the edge.
Because he trades Bitcoin. He's a freaking action junkie.
Chasing the dragon there, buddy.
Yeah. Whatever happened in the last hour and a half, or 2 hours and 15 minutes now, I do think it will be important. You have had a 22-point sell-off from top to bottom here on the intraday, Matt. I know it is lower on volume and all that kind of stuff, but all that news over the weekend coming in, still a bullish trend in the overall trend in the market, kind of just fading price action. Maybe a good week for some confirmation.
If you close at 29.60 and you take out the G20 from the weekend and you're just looking at this at price, you're not taking this as a negative.
Mm-hmm. Yeah, I agree. It's still not a negative. Still not a negative. Just watching it, and obviously now we're up 29.61. We're just moving. Kind of a fading end of the day here. We'll keep an eye on it, and we will be back tomorrow with Delta Tuesday. Guys, I love rapid fire. We're going to keep doing that in our segment. Come and join us live. I like reading what I just read here from Lane and Patricia. Nice to have you back live. And Patricia says, yes, Lane, I agree. It keeps me focused. Keeps us focused too, guys. We go through it methodically for a reason.
Yeah, we missed it. And believe me, the whole time I was cutting that recording for, was it Thursday and Friday?
Yeah, when Zoom was down. Mm-hmm.
Yeah, so I cut for Thursday and we cut one for Thursday and Friday. It takes me longer to cut a 30-minute recording than it does record an hour and a half live segment. So yeah, I'm glad to be live.
Because you don't have a host that takes care of all the stuff for you.
Shut it, Cody.
Cody, I'm very grateful for the work you do. I know that you do a fantastic job, young man. If you were fishing for a compliment, there it is. And that's very genuine and sincere as well. Appreciate you as always. And
I didn't take it as that sincere.
Okay.
All right, guys, we are out. We will see you guys later on this week.
Later, everybody.